Have you ever seen one of those headlines, a company maybe you've never even heard of, and its stock is just skyrocketing? Hundreds, maybe thousands of percent, really
Well,
fast.
yeah, makes you stop scrolling.
Exactly. And you just wonder, what is actually going on there? Well, today we've got a perfect example for you. This massive surge in a company called BMNR.
BitMine immersion technologies.
Right. So today we're doing a deep dive into BitMine, BMNR, because they're making some serious waves, basically betting big, really big, on Ethereum.
Mm-hmm.
So our mission here is to unpack why BMNR stock is just, well, soaring. How much Ethereum do they really have? And what's the actual story behind this pretty wild stock performance?
Yeah, there's a lot going on under the hood. We'll get into the, let's say, unique financial engineering they're using.
Oh, sounds good. And maybe some of the contradictions, too. We've gathered a whole stack of sources for you, financial news, market analysis, the works to help us figure this out. So let's jump in.
Okay, so the first thing that really grabs you is just the speed and the scale of BMNR's move. I mean, this stock was trading, what, around $3 back in early July?
$3, yeah. Practically nothing.
Exactly. Then they announced this big Ethereum purchase. And it doesn't just go up a bit, it rockets all the way to $160.
Whoa. $160 from $3.
Yeah. Now, okay, pulled back hard after that down to $40.
Yeah.
Pretty sharp correction. But then it bounced back, kind of settled into the $60 range more recently. Still, that's not normal market action.
Not at all. That's an incredible run. So what lit the fuse? What started that initial explosion? And, what's keeping it in the news right now?
Well, there are a few key things, key catalysts. First, back on June 30th, BMNR closed a huge private placement, $250 million.
Okay, a private placement that's selling shares directly to big investors, not on the open market.
Right, big institutions usually.
Hmm.
And they used that cash specifically to buy Ethereum, 163,142 ETH to be exact. That position pretty quickly grew in value to almost $500 million.
Wow, okay, so that's catalyst one. What else?
Second, you had some very high-profile backing jump in. Mid-July, July 15th, Peter Thiel's Founders Fund revealed they'd taken a 9.1% stake. That's over 5 million shares.
Peter Thiel. Okay, that name definitely carries weight.
For sure. That news alone sent the stock jumping, 20, 30% in after hours and pre-market trading. People noticed.
I bet. Thiel getting involved always turns heads, but wasn't there another big name that gave them a credibility boost around the same time?
Absolutely. That's the third key piece. Also on June 30th, they appointed Tom Lee from Fundstrat as their chairman.
Tom Lee, the market strategist.
That's the one. And according to our sources, that move gave them huge credibility, basically overnight. It was a big factor in attracting serious investment capital. And Lee, he's not thinking small here. He's laid out this incredibly ambitious goal. He calls it the Alchemy of 5%.
Alchemy of 5%. What does that mean?
It means his goal, BMNR's goal, is to eventually pile up 5% of all the Ethereum out there.
5% of all Ethereum.
Yeah. And just so you get the scale, the total circulating supply is about 120 million ETH right now. So 5%, that's 6 million ETH. It's a massive, massive target.
6 million. Wow. Okay, that is audacious. If they even get close to that, where does that put BMNR in the crypto world?
Well, context is important here. Right now, BMNR is already the biggest corporate holder of Ethereum. And globally, they're the third largest crypto treasury overall.
Third largest? Who's ahead of them?
Only MicroStrategy, famous for stacking Bitcoin, of course, and a subsidiary of Mara blockchain. So BMNR's strategy, it's not just like MicroStrategy's Bitcoin play. It's basically a direct parallel, just laser focused on ETH. Quite a pivot for them.
That MicroStrategy comparison really clicks. But okay, why Ethereum? Why ETH? What makes Tom Lee, BMNR, so convinced about this specific crypto, especially when you hear talk about this great on-chain migration?
That's the core question, really. Tom Lee's conviction about Ethereum runs deep. He sees ETH going way past what, say, Standard Chartered is targeting for year-end. They said maybe $7,500. Lee calls that on the low end.
Low end. So what's his number?
Yeah. He's talking potentially $10,000, maybe even $15,000 for ETH. And it's interesting, Standard Chartered did just raise their own target for ETH to $7,500, up from $4,000 before. And they bumped their 2028 forecast way up to $25,000.
Okay, so Lee's not alone in being bullish, but he's definitely at the high end. Is this just a price prediction, or is there a bigger idea driving it? What's this thesis?
There's a fundamental thesis, yeah. It's being called the Great On-Chain Migration. The idea is basically Wall Street is looking for a blockchain home. They need, as one source put it, a stable and legally compliant blockchain to build the future of finance on. to really financialize the system on-chain.
And Ethereum's winning that race.
That's the bet. Ethereum seems to be becoming the main venue for this. Like at stablecoins, for example, those dollar-pegged digital currencies. Most of the issuance is happening on Ethereum. We're talking about, what, $260 billion in stablecoins out there on public chains, and over half, 54%, is on Ethereum.
And stablecoins are growing fast, right?
Hugely. The projection is maybe 8x growth by the end of 2028. Think about what that does for Ethereum network fees, for demand on the network. It's significant.
That makes sense. More activity, more value. Is there other proof that big money, institutional money, is really moving towards ETH?
Yeah, definitely. We're seeing record inflows into ETH ETFs. Those are the exchange-traded funds that track Ethereum's price. One source pointed to a single day with over $1 billion in inflows. $1.02 billion. That's a massive signal of institutional confidence building.
$1 billion in a day.
Plus, if you look at on-chain treasuries, companies or projects holding their actual funds on the blockchain, 73% of those are sitting on Ethereum right now. It all points to this big shift, this migration towards Ethereum as the institutional platform of choice.
And ETH's price is reflecting some of that excitement.
It seems so. It just crossed $4,700 recently. That's only about 3.5% away from its all-time high, which was around $4,878. So the momentum is there.
Okay, that brings us back to BMNR itself. With all this vision, this market buzz, what's the reality on the ground? How much Ethereum do they actually hold today? And what about their original business? What does that look like now?
Right, the actual numbers. According to the latest data we have, specifically from Pantera Capital, BMNR holds around 1.15 million ETH. As of mid-August 2025, that was valued at nearly $5 billion.
Almost $5 billion in ETH.
Yeah. Though it's worth noting, these numbers move fast because they keep buying. Another source mentioned a slightly lower figure, around 833,000 ETH, for a specific date in August. It just shows how actively they're adding to the pile.
So is holding ETH their only business now? What happened to the Bitcoin mining and data centers they used to do?
Well, technically, they still operate as a blockchain tech company. They were doing things like hosting mining gear for others, mining Bitcoin themselves, selling equipment, running data centers. That was the old model.
But that's not what's driving the stock price.
Not even close. It's crucial for you, the listener, to grasp this. BMNR's stock valuation today is, and I quote, almost entirely supported by their ETH holdings.
So the old business wasn't doing great.
Frankly, no. Before this big ETH pivot, their financial health was pretty weak. Revenues were tiny. Negligible was the word used. And the company had been deeply unprofitable for some time. That's why it was a $3 stock, Almost invisible before they went all in on Ethereum.
Wow, what a transformation. From unprofitable obscurity to a $5 billion ETH treasury, basically. It really sounds like the market is betting solely on that digital asset strategy. What about trading the stock itself? Is it easy to buy and sell?
Yeah, this is another fascinating part. Despite where they came from, BMNR is now incredibly liquid. It's the 25th most liquid stock in the entire U.S. market right now.
25th? That's huge.
It is. It's trading something like $2.2 billion worth of shares per day, based on recent averages. That tells you there's massive market interest, massive activity focused purely on this ETH play, far removed from their original business lines.
Okay, now I want to tackle something that probably confuses a lot of people, myself included sometimes. It's this idea of dilution. If BMNR keeps selling more stock to buy more ETH, isn't that bad for existing shareholders? Aren't they just watering down the value?
That's a great question. It's probably the #1 misconception about these kinds of companies, these digital asset treasury companies, or DATs as some call them, like BMNR, like MicroStrategy. It seems like dilution, right?
Yeah, it feels like printing shares to buy crypto should make each share worth less.
But here's the key. They do it in an accretive manner.
Accretive. Okay, there's that word again. Break that down for us. What does accretive actually mean here?
Accretive means it adds value per share rather than taking it away. Think of it like baking a bigger pie. If you add ingredients the right way, everyone's slice actually gets bigger, not smaller.
How?
Yeah.
How do they manage that?
They sell the new shares at a premium. They sell them for more than the current net asset value, the NAV per share, or even above the current trading price. Let's use a simple example from the sources because it really clarifies things. It's kind of counterintuitive.
Okay, yeah, let's walk through it.
All right. Imagine company A. It holds exactly 1 ETH, and it has 100 shares outstanding. Let's say ETH is trading at $4,000.
Okay, so simple math. 1 ETH, 100 shares means 0.01 ETH per share. And at $4K per ETH, the share price should be $40, right? Based purely on the ETH.
Exactly. $40 per share based on its assets. Now, Company A decides to issue 10 new shares. But here's the trick. They don't sell them at $40. They manage to sell them at $50 each. That's a $10 premium.
Right, so they're taking advantage of market excitement or demand to sell shares for more than the underlying assets per share.
Precisely. They're capitalizing on that premium. So
Yeah.
10 shares at $50 each raises $500 in cash.
Okay, then what?
They immediately take that $500 and buy more ETH. At $4,000 per ETH, that $500 gets them 0.125 new ETH.
Got it. So now they have more ETH and more shares.
All right, let's look at the new totals. They started with 1 ETH, bought 0.125 ETH, so now they hold 1.125 ETH.
Okay.
They started with 100 shares, issued 10 more, so now they have 110 shares outstanding.
All right, 1.125 ETH and 110 shares. So what's the key metric now, that ETH per share?
Exactly. This is the magic part. The new ETH per share is 1.125 ETH divided by 110 shares. Do the math. It comes out to 0.010000 road ETH per share.
Wait, 0.010120. That's more than the 0.01 ETH per share they started with.
Bingo. It went up. And if you calculate the new share price based on that higher NAV, it would be $40.90 per share, also higher. So by selling stock at a premium, they actually increase the amount of ETH backing each share. And for these data companies, ETH per share or Bitcoin per share for MicroStrategy, that's the #1 metric that matters.
That is genuinely fascinating. So even though they're issuing more shares, which usually means dilution, in this specific case, because they sell at a premium, it actually concentrates the underlying asset per share.
Correct. It's accretive.
But the market doesn't always see it that way. You mentioned sell-offs.
Yeah, that's the disconnect sometimes. The market often does react negatively, at least initially, to news of a stock offering. They see more shares and think dilution, full stop. This can cause the stock price to dip temporarily.
Even if the NAV per share just went up.
Even then, this leads to something called MNAV compression. The MNAV is the multiple of net asset value, basically, how much of a premium the stock trades at compared to its underlying crypto holdings. When they announce an offering, that multiple can get squeezed, the premium shrinks, and the stock price might lag behind the rise in ETH's value for a bit.
So it's a perception gap almost, a psychological hurdle for investors, even if the financial mechanics are sound.
You could say that. It highlights how important management execution is and investor understanding. When done right, this accretive equity issuance is a powerful tool to grow the treasury and theoretically long-term shareholder value. But it's not always intuitive.
Okay, that really clarifies the dilution question. It's complex. So given all this, the huge ambition, the ETH focus, this unique financial strategy, just how bumpy is the ride for BMNR shareholders? How volatile is the stock really, and what are the big risks?
Well, the first thing to understand is that BMNR is effectively a leveraged bet on Ethereum.
Leveraged ETH, meaning?
Meaning its price swings are amplified compared to ETH itself. One source literally called it ETH on steroids. If ETH moves 1%, BMNR might move 2%, 2.5%, maybe even more, up or down. So if you're bullish on ETH, it offers potentially higher returns.
But also much higher risk on the downside.
Exactly. Its valuation is, as one source put it, intimately tied to the spot price of ETH, which we all know is inherently volatile. If ETH takes a dive, BMNR is likely going down even harder.
That makes sense. It's ETH exposure with extra juice both ways. What about that MNAV thing we just talked about, that premium over the ETH value? Does that add to the volatility?
Oh, absolutely. That multiple of NAV, the MNAV, can swing wildly, especially when a company is relatively new to this strategy. We saw MicroStrategy's MNAV go above 3x its NAV at times. Another company, Metaplanet, apparently hit 6 or 7x.
Wow.
Now, BMNR had incredible NAV per share growth initially, like 640% in its first month, which arguably justified a high starting premium. But keeping that premium, or growing it, depends on continued execution and market sentiment. Lately, we've seen some of that MNAV compression for BMNR, where the stock hasn't kept pace with ETH's rise.
So the premium shrank?
Yeah. But the thinking is, if that premium gets squeezed down low enough, it might set the stage for another upward move in the stock's valuation relative to its ETH, assuming ETH holds up or rises. It's a dynamic relationship.
Is there a danger that this whole positive cycle, sell stock high, buy ETH, NAV, but share goes up, stock potentially goes higher, could just break, go into reverse?
That is a critical risk. It's like the MicroStrategy model again. That positive feedback loop works great when the underlying asset, Bitcoin or ETH, is trending up. But if ETH were to go into a deep correction, a bear market, that flywheel absolutely can reverse. It becomes negative feedback.
How so?
Well, If ETH price falls hard, their NAV drops. The stock price likely drops even harder because of the leverage and potential MNAV compression. Selling new stock at a premium becomes difficult, maybe impossible. The whole growth engine stalls, or worse, goes backwards.
And then there are just the basic crypto risks layered on top.
For sure. You always have the general volatility. Crypto drawdowns of 30%, 50% are not unusual. We've seen 60%, even 80% drops in past cycles. And the fundamental risk, however unlikely you think it is, that the underlying asset, Keith, could go to zero, as one source bluntly puts it. That's always in the background.
It sounds like management has to be incredibly skilled to navigate all this. It's not just about buying and holding.
Execution is everything. And it's really, really hard. Consistently timing stock issuance to be accretive, managing the treasury through volatile periods. MicroStrategy learned this over years. It takes time, skill, and investor trust. Having Tom Lee at the helm is a huge plus for BMNR. He's described as one of the best managers with JP Morgan experience, but it's still a massive challenge.
So for the average person listening, if they're bullish on crypto long term, is jumping into a stock like BMNR the best way?
For most long-term investors, the sources suggest that just holding spot ETH directly, or maybe using one of the new ETFs, probably remains the optimal choice. These crypto holding stocks like BMNR are cyclical. They have these complex MNAV dynamics. They can be very challenging to trade well.
So who are they good for?
Maybe more active traders. People who might try to time the cycles, perhaps taking profits when the crypto price surges and the stock premium NAV gets really high, or maybe adding exposure when the premium gets really compressed during a dip. They're not necessarily simple buy and hold investments.
Okay, let's try to wrap this up. What's the big picture for you, our listener? We've seen BMNR's incredible, almost unbelievable stock surge. It's clearly driven by this super aggressive strategy of accumulating Ethereum, led by Tom Lee.
Betting on that great on-chain migration.
Right, and they're using this unique accretive share issuance, which is designed, counterintuitively perhaps, to increase the ETH value behind each share, not dilute it.
When it works.
When it works, exactly. But it's also crystal clear this is a highly volatile stock. It's tied directly to the wild swings of the crypto market, maybe even amplified. And it comes with significant risks tied to execution, market sentiment, and the future of ETH itself. It really is a high-stakes, fascinating situation.
It absolutely is. And, we've explored how companies like BMNR are really pushing boundaries here, making digital assets their core treasury, blurring lines with traditional finance. Which leads to maybe a final thought for you to chew on.
As Wall Street keeps moving onto the blockchain, this great on-chain migration onto platforms like Ethereum, are these digital asset treasury companies, the BMNRs and MSTRs, going to become the new blue-chip stocks, the future giants? Or are they ultimately just a new, maybe more sophisticated form of leveraged speculation on a volatile asset class? Something to consider.